Hare Krishna. Welcome to Tax YouTube channel. This is C. Rohanar Pingale, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Marks Network. Welcome to the video series What Law Says. And today we are going to discuss two cases reported to ITAT level under income tax law. So let's dive into it. Let me allow to share my screen. Yes. So today's first case, ACIT versus BNP Paribas India Solutions Private Limited, Mumbai Tribunal. Relevant assessment year is 2017-18 and date of order is 9th February 2026, very latest. And relevant section 37 subsection 1 of the Income Tax Act 1961. Let's understand facts of the case. The assessee is what captive service provider for the BNP Paribas Group. It is registered under the Software Technology Parks of India. For AY 1718, the assessee debited software expenses amounting to rupees almost 28 CR in its profit and loss account. So the expenses included annual maintenance charges, database support fees, license renewal cost, and similar subscription-based payments. So the assessing officer treated this as what? Capital expenditure, allowed depreciation on 60% of the amount and disallowed the balance. So CIT appeals reversed the AO's order and allowed the expenses as revenue in nature under section 37 subsection 1. So revenue filed an appeal before ITAT Mumbai. Very interesting. So let's see what was the issue under consideration. So whether software expenses like AMC, database support fees, license renewals are revenue or capital in nature, and whether they are fully deductible under section 37 subsection 1 or eligible only for depreciation. So let's see relevant legal provisions. Section 37, subsection 1 of the Income Tax Act 1961 talks about any expenditure not being capital expenditure or personal expenses laid out or expended wholly and exclusively for the business purpose or profession shall be allowed in computing the income chargeable under the head profits and gains of the business or profession. So let's see grounds of appeal by the revenue. So CIT appeals aided in holding the expenses as a revenue, ignoring the enduring benefit derived. Expenses resulted in acquisition of the software tools licenses with long-term utility. What revenue is contending is that the expenses as revenue, ignoring the enduring benefit derived expenses resulted in acquisition of the software tools or licenses with long-term utility. They enhance the business infrastructure and efficiency. Hence, capital expenditure is what contended by the revenue. So, quantum of expenditure was also substantial, indicating capital character is what again the another point of the revenue. Failure to follow the judicial precedents supporting the capital treatment for software. So let's see what tribunal observed and held. So Mumbai Tribunal observed that expenses are recurring period cost in the nature of the annual subscriptions for the usage ban rights. So benefits are limited to the subscription period, that particular period, no ownership or enduring benefit beyond that period. So no new asset or intellectual property was acquired, no addition to the capital base. The AO didn't bring any cognate evidence to prove the capital nature. Accounting treatment was consistent and certified by the statutory auditors, relied on coordinate bench decisions and high court precedents, that is example cases involving the similar software subscriptions. The tribunal dismissed the revenues appeal and upheld the CIT appeals order, allowing the full deduction under section 37 subsection 1. So what principles laid down by this case? Annual software license renewals, AMC, database support fees for a fixed period are revenue in nature, and even if it is substantial amount. So that is not the base to treat it as a capital. So focus should be on the nature of the benefit, limited period usage rights, rather than mere the quantum of the amount or other thing. The AO must demonstrate with a positive evidence that a capital asset is created, mere assumption is insufficient. So commercial and accounting treatment consistent with the business reality carries the weight in the IT or service sector, so particularly for captive units. So moving further, let's move on to the second case for today's discussion. ITU versus AK Exports. Chandigarh Tribunal. Relevant assessment years are assessment year 2002, 2003, 2005, 6, and to the 2007, 8. And date of order is 1st July 2025. And relevant section here are section 68, read with section 69C of the Income Tax Act 1961. Let's understand facts of the case. The assessee is engaging in the export business from Ludhiana. A DRI investigation or search was conducted on the group, leading to show cause notices alleging bogus manufacturing, inflated exports to the non-existing entities, and fraudulent claims of export incentives like DEPB and duty drawback. So the AO primarily relied on what DRI show cause notice and treated the purchase as bogus. Means only relied on the DRI show cause notice. Additions were made under section 68, that is unexplained credits, export proceeds, and estimated unexplained expenditure under section 69C. So CIT appeals deleted these additions, observing the lack of independent inquiry by the AO and insufficient corroborative evidence. So revenue appealed to the ITAT Chandigarh. Additional evidence, subsequent customs adjudication was admitted and resulting in a remand. So let's see what was the issue under consideration. So whether validity of the addition under section 68 unexplained credit and section 69C, that is unexplained expenditure, based primarily on only the DRI show cause notice without independent inquiry or corroborative evidence is valid or not, is what issue under consideration. So let's see relevant legal provisions. That is section 68 talks about where any sum is credited in the books of an assessee and the assessee offers no satisfactory explanation about the nature and source thereof, the sum so credited may be charged to income tax as the income of the assessee. And section 69C talks about where the assessee has incurred any expenditure and he offers no explanation about the source of such expenditure, or the explanation offered is not satisfactory, then the amount may be deemed to be what? Income of the assessee. So let's see grounds of the appeal by the revenue. CIT appeals erred in deleting the additions despite DRI evidence indicating the bogus exports and incentives. Export proceeds and related transactions lack what? Proper explanation of source. Failure to appreciate the material gathered in the DRI investigation. So these are the grounds of the appeal by the revenue. Let's see what tribunal observed. Additions made solely on the basis of DRI show cause notice without independent inquiry by the AO and without bringing corroborative evidence on the record are not sustainable. Assessees books, stock movement, and sales offered to tax could not be disregarded lightly. So subsequent customs adjudication orders contained relevant material and warranted fair opportunity. So tribunal admitted additional evidence and remanded the matter for the do no adjudication while upholding the principle that mechanical reliance on external notices is impermissible. So what principles laid down by this case? Additions under section 68 or 69C cannot be sustained merely on the basis of the DRI or custom show cause notice without independent application of the mind or corroborative evidence by the AO. In export cases involving bogus allegations, strong proof is what required. Documented transactions and sales offered to the tax carry significant weight. So remand is justified when fresh material emerges to uphold the principles of the natural justice. So protects compliant assessee from roving inquiries based on the unverified third-party information while giving revenue a proper opportunity to the investigate. So very interesting case laws. So that's it for today. Thank you. Thank you so much for patient hearing. If you have any questions, observations, suggestions, then do let me know via WhatsApp or email, or you can also comment below the video. If you have not yet subscribed to Tax Guru YouTube channel, then do subscribe for latest updates and video series like this. Hope you are gaining valuable knowledge from all these updates and video series which we are conducting on the Tax Guru YouTube channel. So stay tuned to the Tax Guru YouTube channel. Thank you so much once again. Bye bye. Take care. See you soon. Hare Krishna.